Welcome, dear traders. Stock markets of the United States, Australia and Japan slid into bearish territory on a Wednesday amid risk aversion. Watch our video review and find out which sentiment prevailed on forex. Let's start. There are only several days left before the Fed meeting. Next week, the regulator will finally announce its rate decision. The closer the meeting, the fewer traders are betting on a 50 basis point rate hike. At the start of the week, 77% of speculators factored in such an increase. According to the FEDWATCH tool, 74.7% of traders anticipate a smaller rate hike today. It seems that recent warnings by leading US bankers about the risk of a recession in 2023 have somewhat dampened optimism in the stock markets. The Fed's top priority is to cap inflation, pushing it to the 2% target. The regulator is ready to sacrifice the economy and the labor market for this goal. The likelihood of a recession is also a bearish factor for the greenback. The US dollar is unable to assert strength today due to falling government bond yields. It's consolidating in a very narrow range of 105.20 and 105.40. As traders have already priced in a smaller rate hike, the greenback may rise amid expectations of a more hawkish move and risk aversion. However, traders are casting doubt on the US dollar as a safe haven asset in case of a recession. The US dollar index dropped versus its main rivals. It's trading today at 105.20. The Fed's monetary policy decisions will remain the main driver for the US currency. However, it would be wise to closely watch the trajectory of the euro, which accounts for more than 57% of the currency basket. Besides, the ECB will hold its meeting on the next day after the Fed. The yen is the second most important currency in the basket. JPY traders have also factored in a 50 basis point rate hike. The yen has remained weak versus the US dollar for the whole year due to an ultra-loose stance of the Japanese regulator. However, the yen has been able to take the upper hand as the US dollar struggles to maintain a bullish bias amid the risk of a recession. Its growth was also facilitated by a drop in the US Treasury yields. The Japanese currency is very sensitive to their movements. On a Thursday morning, the dollar-yen pair dipped below 136. Shortly after, it recovered to 136.90. In the Asian session, the yen was trying to rise versus the greenback, so the pair was rather volatile, moving in the intraday range of 136.20 and 137.20. The Aussie is lacking drivers to climb versus the greenback. However, the bearish trend that gained momentum after the downbeat trade balance report has already weakened. The AUD USD pair climbed to 0.6718. The Australian dollar retreated due to the risk of sentiment and falling oil prices. In addition, China's economy has been battered by the 3-year struggle with the coronavirus pandemic, so it's slowly but surely getting back on track. Let's not forget that China is Australia's main trading partner. Optimism after the easing of some virus restrictions has already waned. The road to China's economic recovery will be long and bumpy. Therefore, the Australian dollar, which is very sensitive to global risks and external factors, is declining against the US dollar today. In the Asian session, it was trading in the red price corridor of 0.6698 and 0.6739. Risk-sensitive currencies retreated even despite the weak US dollar. The New Zealand dollar has been in the bear's close this week due to fears of a global recession. As a reminder, the Reserve Bank of New Zealand sharply raised the key rate by 75 basis points at its November meeting to combat inflation. However, the Fed remains the most hawkish watchdog among the main central banks. Commodity currencies are now facing strong bearish pressure ahead of the Fed's meeting. In the Asian session, the NZD-USD pair was moving in the intraday range of 0.6328 and 0.6373. Trading was rather volatile on Thursday morning. The instrument was fluctuating at 0.6353, gradually moving down. We hope that your trades are always profitable. We created these video reviews to help you fulfill this goal. Stay tuned and keep close tabs on the market developments. See you soon.